Hello traders. In today's video, we will explain difference between ask and bid chart. What chart opens your sell positions and buy positions? What chart closes your sell or buy positions? What is liquidity and spread, when and how you can check spread history? By the way, this is feature of RF Trader what nobody else have in their platforms. We'll start by choosing between the ask and bid charts. If I want to buy, the ask chart opens a buy transaction, and if I want to sell, the bid chart opens a sell transaction. By the way, nearly all platforms and brokers offer the option to see only the bid chart. In the RF Trader platform, we are so transparent that we provide you with the option to switch between the bid and ask charts. This allows you to see the history of spreads, identifying instances of illiquidity when spreads widened. So, let's open some transaction, to see how exactly it works. Let's open gold sell. Firstly, I have to choose bid chart, or at least turn on bid line on ask chart, if you have ask chart displayed. If we have everything set, let's open sell transaction. And you can see that exactly on actual bid price, system opened the transaction. So, the trade opened exactly at the intended price. Now, if we want to close the sell transaction, we need to know that the sell transaction is closed at the ask price. This means we switch to the ask chart or enable the option to see the ask line and close the transaction. The transaction closed exactly at the ask price. If you were to inquire about a buy transaction, it works exactly the same but in the opposite direction. This means that the ask price opens the buy transaction and the bid price closes it. These rules apply similarly to pending transactions. Let's now move on to explaining some of your frequently asked questions. What is liquidity? What is spread? When does market illiquidity occur, and why does it lead to the widening of spreads? Liquidity in the market is the measure, or volume of buy and sell limit orders on the market. It determines how easily can buy or sell through the market without significantly affecting the desired price. Higher liquidity indicates that there are currently many buyers and sellers, facilitating quick and smooth trade executions. Conversely, low liquidity can make trades difficult to execute, and may lead to larger price fluctuations and slippage in prices you entered, or waiting orders compared to the prices at which the trade is actually executed. Liquidity can be measured simply by the size of the spread, which is the difference between bid and ask prices. Higher liquidity typically means narrower spreads, while lower liquidity results in wider spreads. Typically, time windows with reduced market liquidity occur during significant economic news releases, and during the period from 2200 hours to 2300 hours UTC, when there are almost no traders active in the market. Let's talk now about spread. Spread in the market is the difference between the bid price, the best available selling price, and the ask price, the best available buying price, for a given financial instrument. The spread represents the trading costs and the closest limit orders in the market. The spread can be market, the broker charges a commission as a fee, or marked up, the broker adds the fee to the spread. When the spread is narrow, it means the difference between the buying and selling prices is small. A narrow spread is typically desirable for traders as it represents lower trading costs. The narrowest spreads are usually observed during the peak market activity, when both European and U.S. markets are open. Conversely, a wide spread indicates a larger difference between the bid and ask prices, which can be disadvantageous for traders as it means higher entry and exit costs. Therefore, it is advisable to avoid trading during low liquidity times, around major news releases, carrying large trades into the next day, during illiquid times at 22 to 23 UTC, or trading in these periods, as it may cause more issues than benefits. We hope that this video has sufficiently educated you to prevent unnecessary losses during trading. If you have any questions, do not hesitate to reach out to us, we will be happy to assist you. Wishing you the best of luck.